Hello, this is Robert Sin at Goldfinger on CEO.ca, at CEO Technician on Twitter. It's the evening of Sunday, June 26th, 2022. And a couple of people asked me my thoughts on Westhaven Gold right now, um, and where I feel the valuation or the fair value is at this point in time. Now, obviously, Westhaven is a company, a junior mining company that I have followed pretty closely since early 2018. In 2018, Westhaven made the South Zone, new discovery at their Shovel Nose project in BC, southern part of BC, Canada, about 2.5 hour drive from Vancouver. Um, the company was trading around 12, 13 cents a share at the time that I started following them and bought my first shares. Eventually reaching a peak in late 2018 after they drilled some really high grade, broad gold intercepts at the South Zone, a peak of above 140 a share. So it was more than a 10 bagger in 2018 from low to high. Over the last several years, Westhaven has continued to drill out and prove up the gold deposit at the South Zone, the gold and silver deposit at the South Zone, and expand the strike length of Vein Zone 1 at Shovel Nose. And they found a few other vein zones as well, although um, based upon the drilling to date, it seems like vein zones 2 and 3 are nowhere near the the impressive grade and width of vein zone 1. And the share price has swung wildly, gyrated wildly, in the last several years, from as low as like 30 cents at the March 2020 COVID crash low to the 120s when some optimism came into the market about the Franz zone in late 2020. So it's gyrated wildly, and even recently, Westhaven put out a tremendous intercept, 23 meters of 40 grams gold equivalent at the Forget Me Not zone at Shovel Nose, and just an absolutely stellar intercept. Seems like they really hit the sweet spot of this high grade shoot at the FMN zone. Um, and so far, the subsequent drilling hasn't managed to hit anything quite even close to it. And also, the market environment for gold, for junior gold miners, has absolutely plunged. The sentiment is very weak across the sector. So, literally, a full round trip, actually, more than a round trip. Last week, it got down under 40 cents briefly. Ended the week at 41 and a half, but it's been a pretty steep drop in the month of June for Westhaven shares, as well as many other junior mining companies across the sector. So here we are today, and it's an interesting question. Like, what is Westhaven worth? Why is the share price so depressed when they just drilled a tremendous hole only a few months ago? And even their last news release, while definitely not fantastic, they had some good intercepts. I mean, 15 meters of 5.69 grams per ton gold, 350 grams per ton silver. Um, there were a few other pretty good hits in here. Um, the problem is, I think that in total, this news release reported 21 holes, um, and there were only three that were really good. There were a lot of really low grade stuff, reported, especially at the Alpine zone. And I feel like this news release failed to communicate exactly what their plans are. Um, and the Alpine zone is an important part of the Shovel Nose project, as is the potential to connect um, the FMN zone and the Franz zone up here. This is sort of important to fill in these gaps here and over here. Um, and Westhaven is only drilling with 2 rigs, right now. So they can only do so much. They can only work so fast, with 2 rigs, right? So this news release, the one they put out earlier this month, it did not impress me. And I don't think it impressed a lot of others. And that also helps to explain the share price. But I honestly think that most of this decline from, let's say, 65 cents to 40 cents is due to market conditions. It's not really that company specific. This drop, this pretty substantial drop of almost 40% has occurred on pretty low volume. And I think it's just basically that people aren't interested in buying gold juniors right now. And so, Westhaven shares have suffered. Now, let's forget about the market conditions and let's just talk about what's Westhaven, worth. First of all, I think important thing to make note of is the share structure. So 127.25 million shares outstanding right now. So at 40 cents a share, we're talking about ballpark $50 million market cap. Now, if you add in options and warrants, a fully diluted share count, you add up almost another 20 million shares. Now, more than half of those warrants are at $1. So those are far from being in the money right now. And if those did get exercised, it would bring in another $10 million to Westhaven's treasury. But even at 40 cents a share, Westhaven has a substantial market cap of more than $50 million. So that's giving the company credit for something, for sure. And that is the resource at the South Zone. It's valuing those million ounces, 1.1 million ounces, at $50 an ounce, which honestly, for a pre-PEA company, this is pretty early stage, exploration still. $50 per ounce, in my mind, is a pretty fair valuation. Obviously, if they publish a PEA, if they publish a pre-feasibility study, the project gets advanced further, the economics make sense, then obviously that $50 valuation can move up to $75 or even $100 per ounce, right? But we're not there yet. This is a pre-PEA company. There's no economics that have been put on this project. So we're all just kind of guessing. Okay. And so when you're guessing and there's more uncertainty, you're going to receive a lower valuation than you would otherwise, right? So that makes sense. I would say that on the flip side, the positive for Westhaven is the fact that it has a very attractive property package on a very underexplored gold belt in a great location. So this area of Canada is a good location, generally speaking, for mining. And the fact that there's a lot of infrastructure in this area, including power, highway, road access, labor force, et cetera, et cetera. There's a lot of good things, positives for a mine in place here. So that's positive. Also, the fact that, you know, these projects were cherry picked uh, by the company over many years. This property package was assembled very carefully with a great deal of thought and a great deal of exploration work, a lot of prospecting work to assemble this property package. And obviously, that's been proven at Shovel Nose that, with the drilling the company has done to date. They've justified and validated the early prospecting work and staking that was done. There has been less work done on the other three projects. The least work at Skunka North. And Skunka has been drilled a couple of times, 15, 16 years ago, but it hasn't been drilled in the last decade. It's seen very little exploration. And I think that in many ways, Westhaven is being punished, or it's not being given any credit for these other three projects. I'm going to show you an analyst report from Raymond James, where part of his valuation methodology is giving the company $5 million in value each for these three projects, added to a $75 per ounce valuation from what he sees as 1.5 million ounces of the South Zone. I disagree with this valuation methodology. I think $75 an ounce is a little high for this stage at the South Zone. And I also wouldn't give $5 million valuation for each of the other three projects. It'd be one thing if it was a 2-asset early stage junior, and then you'd say, yeah, okay, two interesting, exploration, early stage exploration projects with a little bit of data like Skunka or Skunka North. Yeah, let's give them 5 or 10 million credit for each project and give them a 15 or 20 million market cap. Okay, fair enough. But when it's a 4 project company, and the company has been devoting 100% or 99% of its time to the single project, Shovel Nose, then it's really hard to give any additional value to any of the other three projects. Now, obviously, those projects do have value, but the company is not really advancing them. The company is not putting out any news flow about them. If they want to option the projects out to another company and get some shares and some cash, then okay, there's some value that would be unlocked, right? But until something is done, either an option, a JV, or they just work them themselves, it's really, the market's just not going to give value. Just not really going to give any value. And especially the longer they remain dormant, the even less credit you get for them. So I think in many ways, I think Skunka and Skunka North have been completely forgotten. And so I think that, in my mind, that's one of the things that I think that Westhaven should do to unlock value and sort of wake up the market to the fact that this is a 4-project company. It's a potentially camp scale property package in the Spence's Bridge Gold Belt. Great location, extremely underexplored. So there's a lot of upside. But if you don't work the projects, you don't get any credit for them, right? And so that's, on the flip side, that's a challenge for Westhaven. It's a $52 million market cap company. One of the things they've done well is be good stewards with the share structure and with shareholder capital. And so I just gave a little summary here about what's happened recently and what I think maybe some of the opportunities and challenges are. One of the things that Westhaven has done really well is they've spent money shrewdly. They were able to prove up a 1.1 million ounce maiden resource for less than 60,000 meters of drilling. Ballpark, it cost them $10 million worth of drilling to demonstrate over 1 million ounces of gold. That's money well spent in my mind. That's money well spent. I'm not counting the corporate overhead and all the other expenses the company has. But just the drilling costs alone, I think that they've done an excellent job maximizing, stretching their dollars as far as possible. If they're able to do that as effectively for the next million ounces, it would be absolutely unbelievable. It would be fantastic. I'm not holding my breath, though. Obviously, the cost of diesel fuel and other costs have gone up, so it's going to be harder to generate those same kind of results. But job well done by Westhaven so far, in my mind. Um, yeah, so just going through the presentation, we all know a lot of these key positives, especially those who have followed the company for the last several years. And it's actually getting kind of boring to hear the company with the same pitch over and over again. Road access, highway close to site, 2.5 hour drive from Vancouver, 30-minute drive from Merritt, power line on property, yada, 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 right? It's the same pitch over and over again. And that just gets boring. And so I think that one of the things that Westhaven is missing now is a lack of originality, a lack of anything new, exciting. And that's why I think that it's so important that they make the best effort possible to drill Skunka this year, the Skunka Creek project. Now, Skunka is a project that has historical high-grade gold intercepts. I forget what the exact intercept was, but it was like something like 20 meters of 12 or 13 grams from around the 2005 to 2006 time frame. And just talking to people in the industry, Skunka is a very attractive location. It just makes a lot of sense for a number of reasons. So I think this project needs to be drilled. And then also with Skunka North, at least getting it to the stage of being drill ready. So you've got your targets lined up. Targets are optimized. And if you had another $1 million or $2 million lying around, next year, you could choose to drill it if you wanted to, right? I think that that's the move. That's the right move to make for Westhaven this year. It doesn't mean that you're getting distracted from shovel nose. It simply means that you're reawakening to the market that you have 4 projects. You have an extensive property package across a highly prospective gold belt in a great part of the world for mining, right? And so I think that some fresh energy, a new vision, sort of redoing the presentation would pay off well for Westhaven right now, And so what do I think it's worth? I think that at 40 cents a share, it's very well supported by the drill results to date and the company's property package. I feel like 40 cents, about a 50 million market cap, is a floor. It's a good foundation. But for it to get back to 80 cents or $1, or God forbid, above $1, the company is going to need to demonstrate more scale at Shovel Nose. I actually don't think a major would really be interested in this project unless they were able to prove up at least 2 million ounces at Shovel Nose. That's just my opinion. Not saying that they can't do that. I think they absolutely can. It just requires more drilling. And what does drilling cost? It costs money. It takes time. And so that's sort of a negative or a headwind. If we go back to the presentation, look at the cash. This was an April presentation, so 2 months old. They had 1.5 million then. Assuming they're about 300,000 or 400,000 a month cash burn rate, this is under $1 million now. Yes, they're going to get a $2 million tax credit, hopefully in the next month or two, but you pretty much know a financing is coming here at some point in the next couple months. And so whenever the market sniffs out that financing, the bankers know you need money. not a favorable situation for the share price in the near term, right? Um, so that's a headwind, and I think that for some people, when even if they like the company, they like the story, if they know they're going to have to finance soon, they're more likely to just wait to buy. And so I think that's another thing that Westhaven is suffering from right now. But I do believe the valuation is very well supported at 40 cents a share. And like we saw in early April, they put out that huge intercept and the stock almost doubled, right? So that potential still exists here, especially when it's so deeply oversold. And market sentiment and perception of the company can vary wildly from month to month or from year to year in this sector. Um, when companies don't put out much news flow for a few months, the share price is more likely to just steadily grind lower. Everybody forgets about it, and then suddenly, if they jolt the market back awake with some great, intercepts like that 23 meters of 40 grams, then suddenly you get a massive move, right? But you need it, unfortunately, in the sector, you need to keep the market's attention. And so once you put out a great hole like that, you got to follow it up with something. You can't leave them hanging for a couple of months, and that's challenging when you've only got two rigs going, right? Um, but in summary, I think that 40 to 50 cents a share is a very fair value. I think it's very well supported there. And if Westhaven is able to prove more scale at Shovel Nose or open up the map with drilling at one of the other projects, I believe Skoonka is going to be the next one, then suddenly it could easily be back to 100 million market cap or more. And it seems like $1 per share is pretty much uh, uh, an upside target that a couple of analysts have on the company. And I think that $1 a share at this point, when you consider the warrants and options outstanding, gives it about 150 million market cap. I think that's a good upside target. But in order to justify a $150 million valuation, I believe they will either have to prove more scale at Shovel Nose and or have some really nice, drill intercepts at one of the other projects to sort of open up that map and leave the potential or offer the potential of a camp scale play to the market.